we're at the point right now where the dislocation is so huge. I don't think that there is a better timing in some ways in all these years that I've been in the region to look at events and to look at which names, can survive and which can't, and the ones who even, I think survival now is in quite gray zone as well, because we have repriced so much that we have so many names in priced as though they're distressed, even if they haven't yet defaulted, then, you really can be looking at what sort of recovery. And the recovery analysis, goes to which entities will still be a going concern, even if they default versus, those that really will go into liquidation. This is the same type of scenario analysis that I'm sure other people are doing into Evergrande. But, I do think now we're looking at name by name, case by case, and, you're looking at also the, I think the unpredictability across many other sectors may not apply, as much to the property sector. And that may be a bit of a contrarian view, but that's what we think, because we still think that property sector as a main pillar, matters such that they will want to maintain stability, as you could see this week with the PBOC statement. So, in our opinion, with the backdrop of property sector held largely, in a stable environment, meaning that they won't necessarily do huge easing across property per se, but there will be selective targeted easing, for example, with mortgage quotas and with bank lending for legitimate home buying. So I do think that there's more than ever a lot of events to be looked at in China. And when you talk about time horizon, what's really interesting now is because of the intense, repricing, particularly this month in light of Evergrande now going into, restructuring and probably inevitable default, then, it's actually caused a lot of even, 8-month, 6-month, 3-month bonds, even that, legitimately the market will believe that they should, these companies will pay. Despite that view, you have this sort of technical sell-off. So I do think more than ever, the upside downside is, heavily skewed towards looking at, our markets when you have bonds now pricing at, as though 40% of single B property developers are going to default. There's got to be pickings there.